Alright, it looks like we are up. I'll give it a few minutes to sort of let people roll on in, and we'll get to it. No way. What's going on, everybody? I'm just going to give it a couple minutes, and then I'll get started. I just want to give some people a minute or so to find their way to the link. I'm excited for this one, guys. Sorry it took so long. Will be worth it. What's going on, Victoria? Alright, I'm going to try to keep this plain and simple because I also want to be able to record it and put it onto our YouTube and sort of be able to key it off so people could see this is the intro, this is finding the zones, this is using market context, because we're going to be going over a few things in this. Your sound is good, something of an echo. Oh, is it a bad echo? Do you want me to switch something? Is it alright? All good? Alright. Cool beans. Hello, everybody. Alright, well, I'll get into it. First, hello and welcome everybody. Bullishbrs Kevin here, and I am thrilled to start this webinar where we'll be exploring the fascinating world of supply and demand. Throughout this session, we'll dive into some of the great and very key topics that will enhance your understanding and trading skills, whether you're a new trader or a trader with experience. First, we'll begin by understanding the fundamental concept of supply and demand. And from there, we'll explore some of the powerful market forces that shape price movement and create opportunities for us as traders. A bit of an echo? Yeah, you guys are saying an echo? I don't want to keep going if it's a bad. What's going on, everybody? That's awesome. Very good. Let me know if this is any better, guys. Is that any better? Let me see if I can bring it down a little bit. Is that alright? Alright. Anyways, by gaining a clear grasp of supply and demand, you'll be able to... You don't hear an echo? Perfect. Alright, I'm sorry. I'm keep getting distracted by the comments. No more of that. I'm going to get to it. Everybody, I do hope you enjoy this, this supply and demand course. We're going to do this bit of a webinar. We're going to teach you guys what is supply and demand, how do we find supply and demand, how can we trade supply and demand, and how do we identify balanced markets versus unbalanced markets, and trending markets, more especially. So let's get into it. Let's delete these off. So the first thing I always like to do when looking for supply and demand is I like to start on a larger time frame. Remember, the trend is always your friend, and another thing, when you can't figure out what trend we're rocking with, when in doubt, zoom out. Remember that. That rings in my head constantly. When in doubt, zoom out, because then you're able to see a clearer picture. So let's start on the weekly. Go as big as the weekly. And instantly, what I'm going to look for a demand zone is I'm going to look for some type of price action that bases out and then has a rally for continuation. So this right here would be a great example of a weekly demand zone. And the reason for that is because this was a red basing with big green impulse moves afterwards. And what that's going to do is that's going to leave unfilled market orders in this area. And those unfilled market orders cause liquidity and cause an imbalance. And that imbalance is what moved the market so high so fast. And that's also what caused this demand zone to form. So it does two things. It gives us the move, and it gives us a zone. Now with supply and demand, a lot of people say, oh, well, it's a waiting game. It's a game of waiting. Sometimes, yes. Sometimes the larger zones, you do have to wait for the larger time frame zones to come back. You know, this is a weekly zone. We might not see it for months. There might be a daily zone we might not see for a few weeks. But that's also why we break it down into smaller time frames as well, to give ourselves as traders a higher probability and a higher chance of getting in a good trade and being in the right trade. So I would see this daily zone right here, and I would mark this out as a daily. You don't have to write demand, you don't have to write supply, because what we're going to be doing is using green and red. That's the way we keep our charts nice and clean. No messy indicators, nothing wrong with indicators. Some people use them, some people don't. I prefer not to, because I feel like if I could read price action, it's a lot more important. Because price action and volume, that's what moves the market, not indicators. Moving averages, those are lagging. Those do not move the market. RSI, sure, that's great. Me personally, I like trading ES, which is SPY, if you guys trade options, and I use NQ, which is QQQ as well with supply and demand, so I could sort of balance them both out. If demand is met on ES and NQ, I'll look for a buy order. If we're both in supply on ES and NQ, then I'll look for a sell order, but it all depends on market context as well. So let's continue. We have the 1 weekly demand, and we have a weekly supply. And we're going to change that to red. This is weekly or daily. This is the weekly at the moment. So right up top, we're going to be using TradingView for this webinar. On the top left corner is where it gives you the time frame. So I always start with weekly, then I go into daily, and then I start going into the smaller time frames, the 8-hour, the 6-hour, but we'll get into that momentarily. So we're going to change that to red. We're going to OK that and change the trend line to red. And what's cool with TradingView, guys, here's another cool trick, is you could save templates like these. And let's say that was a weekly zone. I could save that as a save drawing template as S weekly. That way I know it's a supply weekly. And every time I mark a trend line like that, we'll just do right here for an example, and you click that template, it's going to automatically draw that for you. That way you don't have to be sitting here typing it out each time. And then you could also do that for every time zone. You could do it for the daily on the 8-hour. You could do it for anything, any color, whatever your heart desires. Key levels, all of that. Another question was Euro daily, so I was confused on demand. I apologize about that. Yeah, no, this is weekly at the moment, going to be in daily in just a sec. It doesn't matter if there's a basing candle or not. It does matter for a basing candle, and what you want to look for is some form of consolidation. So if you can't see the basing candle here, you would want to check a different time frame, because I can almost guarantee you another time frame is going to have that demand zone or basing candle that you're looking for, because the market needs this basing candle. Because you got to think of it from this perspective, right? If we were selling off at this point, and this candle hasn't closed on the weekly, and we're selling off hard, and these were the past weeks, as a retail trader, we're going to be chasing that short, but the weekly hasn't formed, and when the weekly formed as a basing right here with a consolidation, once we had this pop, that gave us our continuation. But it needed to trap this liquidity here before we move up. The market needs to trap liquidity before a move. Always. There will never just be a random move up. There has to be some type of liquidity grab, whether it's a break and fake out, like a breakout of a key level, but it fails to hold and it comes back, because the market knows what retail and investors are looking for, especially retail traders. They know what we're looking for on the daily time frame. 5 minutes, 15 minutes, some people use the 1 minute, 2 minute candles. Those are very difficult to trade. What's great with supply and demand is it gives us our high probability areas for a reversal or some type of shift in structure, and that's what gives us sort of an edge in the market. And once you have an edge in the market, you're no longer gambling or just guessing with your trades, but then you become smarter. You can't learn if you're just guessing. You can't just buy because it looks good to buy or sell because it looks good to sell, because then things like this will happen and you'll end up being that liquidity grab. You don't want to be getting a margin call, like they say. So you want to be on the right side of the market. So these were some daily zones. Weekly zones. I apologize. That one does say daily. Look at that. So sorry about that. Can't talk and type. Let's get that going to a daily, weekly, perfect. And now we're going to go into the daily. And what you'll see is using supply and demand, it also gives us the market's range. And what you'll see once we start going into smaller zones and smaller time frames, the range gets a lot smaller. So right now in the weekly time frame, weekly zones, we're about 870 points of a range. But now we start going into the daily, I can guarantee you that zone's going to get a lot smaller. So let's take a look. Yep, immediately we have a daily supply zone. So what we're looking for is a green basing on a supply zone, followed by red sell-offs. You want big sell-off candles for a supply zone to be, for sure, so for it to be valid. You know, you want a strong impulse move. If you get a small move, it's not that valid. Like, let's say right here, this was a good example of a bad example. We had a basing, and, you know, somebody could have been, you know, on the edge of their seat and wanted to make sure they got in a trade, and they could have made this a daily supply, because we did have a small basing candle, and we had one drop, but we also didn't have much continuation. We stalled out, we started to range almost immediately after we made this zone. So this would be invalid, and what happened did not work out. So we go back to this one up here. Another thing, obviously what you'll notice is there was a basing candle here with a sell-off, and then we had another basing right after followed by a sell-off. So you sort of are up in the air of, should I mark the supply zone here? Should I mark the supply zone here? You always want it to be near the closest part, and you always want it to be almost capturing this whole little channel of consolidation here. So let's say right here you could mark. But if you wanted to be, you know, rather be safe than sorry, you could of course pull this down and make it a larger supply zone, you know, play it safe. And what happened today, or what happened Friday, we got a nice big impulse move right into supply we started to reject. Does that mean you should short it as soon as we get in supply? Absolutely not. You got to take market context into hand. We kept breaking supplies, we kept creating new demands. Now let's go into, let's see, here's a daily demand right here. I would mark this daily demand, but I'm going to show you guys something on the 8-hour that actually ended up holding very well for these zones. So once I'm done with the daily, I'm going to go into one of my hourly time frames, and I usually, again, I keep up with the higher time frames and work my way lower so I can see the larger range and sort of break it down. So I go to the 8-hour. Now, if you're charting equities, I'll go over how to chart supply and demand on equities because that's definitely different from charting supply and demand on futures. The reason for that is because futures market is open 23 hours a day, whereas equities are only open from the 9:30 to 4 p.m. Eastern. So there's only 6.5 hours of actual solid liquidity being traded for these equities and positions. So what you're going to do with that is you're going to turn the extended hours off, and you're going to use smaller time frames. But again, I'm going to go over ES and NQ and show you guys how to find these zones, and then we're going to go over equities. We'll do maybe an Apple and a Microsoft, or I'll ask you guys to suggest something. I know Nvidia's been doing great, or Tesla, but those are a little difficult because of the gaps. So let's get back to our ES, and we're on the 8-hour now. And what you could look for too when you're charting your supply and demand zones is a rally-based rally. Now this is a type of chart pattern that you'll see a perfect example right here on the 8-hour. A rally, a whole bunch of rally candles with one basing candle. And what's great about this basing candle, what do you mean basing candle? Pat, what I mean by basing candle is it was in the opposite direction and normally tends to have a long wick on the bottom. It doesn't have to be a doji. Dojis do work as well, but I'd prefer just some type of basing in the opposite direction of whichever direction we're going. So for a demand zone, I would want a red basing. For a supply zone, I would want a green basing. So I'm going to mark this one right here, and you guys are going to see the magic of demand zones, which is amazing, guys. This stuff it's really, really great. I mean, look at this. Gave you one move up, gave you another move up, and if you were swinging this move right here, it wouldn't have stopped you out, and you would have been able to catch this whole move. Imagine being able to tell somebody, oh yeah, I caught that, ooh, what's that, a 100 point, 200 point? I caught over 200 points on ES. If you're trading futures, one ES contract, $50 a point. I'm not going to do the math on that, but that's a lot of money for one contract. So something else I would point out as well right here. So here's an example of a basing candle that doesn't really form with a long wick on the bottom or anything, but it's still pretty valid because it covers the consolidation area. The consolidation area is where the market makers are filling their orders and the retail traders are sort of getting faked out into theirs. So as we're coming down, we start to consolidate. People are staying short. Short positions are being filled. Meanwhile, institutions are buying, buying, buying. When the market looks ready to sell off, that's usually the best time to buy because they know what we're looking for. What happens? We got one big move right up here. There was another zone I wanted to mark and go over. Yeah, here we go. There was an 8-hour zone that broke that I wanted to go over for you guys. Alvaro, yes. So a candle that has a lot of liquidity, yeah, absolutely. Again, it's sort of like a fake out candle, you know, because if we're looking at the chart right here, you know, candles are forming, we're selling off right here, whereas retails are going to short, we're selling off. We just hit 4,200 and we're selling off. We just broke below 4,100. We're going lower. They don't realize we have a demand zone right here, which is so amazing of supply and demand to just be there for us to read. And what happens? We get a nice big impulse move up. And this right here, this candle could have also been an 8-hour demand zone because it had a rally afterwards. But we already have this zone here, so I'm just going to keep this one as is. The 8-hour that broke that I wanted to show you guys, here's a great example of how to read a supply and demand zone once it's broken, how to use that market context. So we're going to do an 8-hour supply right here. Now this zone was valid and worked out pretty well a couple of times, and I'll show you. So first it gave us some moves down, gave us some moves lower. We were able to use market context to say, okay, we rejected supply. We created a lower high inside supply, wicking right off of it, and then we kept making lower highs till we finally sold off. Now we come back up here, we're again rejecting it, but this time we're not getting as harsh of a rejection. We're coming into it, we're rejecting it, we're only going down about still 80 to 100 points, which is a big move, but not as big as this move right here. So what happens? The zone is getting weaker. The more a zone is used, the more the zone is ate up, the less liquidity it has. The reason the zone is there is because it has liquidity. Once the zone's used more and more, you see this? We start going higher and higher until we finally break it. Then we break it even higher here. Now what I'm reading here is we broke it, we gapped above it. People are seeing this and going, double top, we're going down, we're going to sell off. But I'm reading this and saying, no, we're not. We have been breaking every supply coming up. We've been ranging. We finally broke this 8-hour supply, which tells me we're most likely going to continue breaking higher. The market structure has not changed. We broke supplies. We kept breaking supplies. On NQ, which I'll show you guys momentarily, we also kept breaking supply, which means we're going higher. So why would I want to go against the trend? I don't. So what happened, we broke it, finally broke it again, came down, and what's great is we started using this as a demand zone. We formed a new demand almost exactly with where that supply started, which is pretty key, which tells me that area is really strong. So now I'm able to go back, delete this zone, and we have a new demand zone. Because again, once you start seeing what do you mean by big impulse move up? Sorry, Aaron. What I mean by that is a big move. Almost, you want it to be strong relative to the candle that you're seeing as a basing. So, for example, if we were looking at this candle as a basing and this as the rally and an impulse move up, the candle itself is only about 13 points, and the impulse move up was about 86 points. So that's an impulse move up, is some type of move that's almost unexpected that would make a lot of people go, oh, well, I could never catch that. I could never trade that. I could never be in that. But again, that's where supply and demand comes in and really gives you those higher chances of being a successful trader. And not only that, but being in these big trades, these big plays that play out, you know? You read market context and you know that we broke this supply here and we kept holding this demand here, and every time we sunk lower, you kept buying the dip like you were supposed to. That's how you follow the trend. That's how you use trend as your friend. But also what I mentioned earlier is, as you see, once I start going into lower time frame zones, the range gets a lot smaller. And of course we have to play the range. Sell at the high, buy at the low. Where would we place stop losses and take profits in context with supply and demand? That's a great question. So what we do with supply and demand, we also use support and resistance with it, which I'll also get into in just a moment. And to find support and resistance, I use those as key levels, and I find those on the higher time frames, just like supply and demand. I'll look for things on the 2 hour, the 4 hour, the daily, and I'll use key levels along with supply and demand to find where my take profits are, where my targets, where my stops are. And sometimes the key levels will line up either inside demand or inside supply or right above it, and we could almost use that as an entry point to go long and or stop below or at demand. It all really depends on how much your risk reward is. If you were playing longs, if you were just strictly getting in at demand, getting out at supply, or selling at supply and getting out at demand, you could of course do that as well. Will that always work? No. Do we always hit supply and demand every day? No. Do we always hit at least one of them? Usually. Unless we're in the middle of nowhere and you don't have any smaller zones marked, because remember, if we didn't have any of these 8-hour zones in here, or daily zones in here, and just had the weekly, we'd be seeing this big range and we would just be in the middle of nowhere. But because we were able to break it down and go into smaller time frames, we're able to see where the range is. We're able to see we have a strong daily zone right here. Maybe we'll pull back and come back to here. So me personally, here's a good example of a key level. Since we're hitting new highs, new year-to-date highs on ES, what I would look for is new key levels, because all of my key levels previously are down here, are over here. I don't have any up here as of yet, any over here as of yet. So what I would look for is an area where maybe we did double top, or maybe we did have some resistance or some support. And what I would do is I would grab my horizontal line tool and mark it right there, and that would be my key level. So let's say we're strong, let's say we open Monday, we start selling off because we need a bit of a pullback, market needs to breathe, but we don't make our way all the way back to demand. That's okay with me, because I have my key level. If we hold this key level, I'll look to along the market, or I'll look for some type of market structure above this key level. So because we're charting on a higher time frame and we trade intraday day trading with a 5 and 15 minute, we're able to say, okay, let's see if we create a higher low right on top of this key level and then continue higher. That way you could enter on the higher low and put your stop at the previous low. That way you're able to know where your stop is, you know where your target is, and you're able to map it out. It would sort of, if you're doing the higher low thing, it would sort of look something like that. Again, using supply and demand is also great because it gives you the higher chance, the targets, really, really great targets. I do want to keep breaking it down into the smaller time frames because there are other zones here. And let's see, so 6 hour, we'll go right to the 4 hour. So you see right here this big candle, you see this big impulse move up, but we don't really have much of a demand zone right here yet. But we have this long wick on top, this long wick on bottom on this candle. This tells me if I keep going to smaller time frames, I'm gonna find that zone. So I'm in the 4 hour now. Alright, let's check the 3 hour. 3 hour, again, another long wiki candle, but it's still green. It's still the same color, same direction as these candles. I'm not going to mark it. My supply and demand that usually has worked best is usually based off of candles that are in the opposite direction. So let's keep going. We go to a 2 hour. Still nothing, sort of getting there. Now, I like to use the 90-minute, and that's because obviously it's an hour and a half. And that's actually where this zone is, and what's cool is it's a demand zone with a key level. So what I would look for here is I would mark this as a 90-minute, and I would bring my box down, and what I would look for here is I would look for some type of market structure once we get into this demand zone to either go lower, right, create a lower low inside demand, which could trap sellers because they are unaware of the demand zone, but for the key level to hold. Or I would just look for the price to come near the key level and sort of get some buyer presence. Now, whether you read the tape, whether you read time and sales, level 2, these are all great market tools to look for buying pressure and selling pressure other than supply and demand and just using the candles. So with this, what you could do, knowing that this supply is still valid, is you could have your order ready. You could have a long order right here. You could put your stop at the bottom of the zone, because once a zone is broken, it's invalid. So if we are going to turn around in this area, it's going to happen in that area. It's not going to break below it and then turn around. Unless there's another zone right here, which... Look at that consolidation. Looking at that consolidation makes me think there should be a zone right here. The 195, by the way, I'll get into that momentarily. Yeah, see this? This is a good amount of consolidation. So it always depends on, also it really depends on how much practice, how much time you have in the charts, how much time you've been using supply and demand, what works best for you. Not every zone is going to work every time. Not all zones work, not all zones are valid. But that doesn't mean the areas aren't valid. That doesn't mean you should stop doing it. The supply and demand is something that's proven itself to be of value and sustain value, not only the stock market, but all across the world in every market. Target, Walmart, supply and demand, it's in the chains, there's supply chains. I mean, the supply and demand runs the real estate market. It's all over us, and we don't even realize. But once we have that supply and demand context in the stock market, and we're able to use that edge and find something that works, then we're really able to do great things. Do you create these zones in advance before the market opens? Yes. Are supply and demand zones stronger on higher time frames? Yes, absolutely. So the higher the time frame, the stronger the zone. So a few things. 1, the higher the time frame, the stronger the zone. And 2, the harsher and stronger the impulse move, the stronger the zone. Because if we left super fast, super big impulse move, that means there was a heavy buyer that just pushed it through the roof. We just went flying. That means there's so many unfilled orders in that zone that once we get back there, we're probably going to wick right off of it. You know, a wick obviously is a fast rejection. So yeah, I do chart these supply and demand zones before the market opens, and what's also great with supply and demand zones too is you might go a day or two where no zones are broken and you don't have to chart every single day. What you can do every single day, however, is wake up before market opens, create some type of trade plan, see where the market is in accordance to your zones and key levels, and you can play it from there. So we're sort of about done with ES. If you guys want, now it's completely up to you. I wasn't sure how long this would run so far. Would you guys want me to go over NQ as well? Or do you guys want me to go right to support and resistance, which is finding like the other key levels? Or I could do NQ now, and then we could do the support and resistance on ES and NQ. And then later I also wanted to go over how I use VIX and how I find key levels on VIX as well. Can you expand on the difference between support and demand? Supply and demand zone. So support and I'll get right with you, Regina. I'm so sorry, a lot of questions coming in. So there's support and resistance, and there's supply and demand. So supply and demand is where the institutions are filling their orders, whether it's a demand and they're buying, or it's a supply and they're selling. Or a support and resistance usually is about a key level, usually is about an area where we rejected often. So like where we might not have a supply and demand, we might have a key level. So if we look right here, we can mark this high right here as a key level, and we see we got another rejection. And then we see we broke it, and we had trouble around it. We see we broke it again, came up. Not every time it's going to work. Got to remember that too. When you're using key levels, it's really great to use them with supply and demand, because your supply and demand is your more updated zones. I don't know if you mentioned this, but is there a difference between supply and demand? Oh yeah, so that's the difference between support and resistance. Support and resistance is more key levels, which is just a singular trend line, and supply and demand is where the market makers and where the institutions are actually filling their orders. Support and resistance is just historically where the market has rejected or has held up well. Can pivot levels be used to determine support and resistance? Absolutely. I mean, again, it also depends on the time frame. Pivot levels are important because those are also how we signify if we're making higher highs or higher lows, and that also helps us find trend. How much weight do you put on Globex versus open market? Quite honestly, Pat, I don't really see it as, well, did we make this zone in Globex or did we make this zone when our market was open? I see it as, did we make a zone or not? Did we have a big impulse move or not? If the zone was made at 1 in the morning, then it was made at 1 in the morning. If it was made for us at like 3 in the afternoon, then great, it's made at 3 in the afternoon. But I won't look at the time, like the exact time. Like let's say this one right here is at 8 in the morning it started. It doesn't really, like this one right here was at 10, this candle was at 8, this one was at 12. So I don't really see it as like what time frame matters. Well, not what time frame matters, but what time is it that matters. As long as there's an impulse move and a basing candle, that's what creates the supply and demand, and the key levels is just the cherry on top to help us find stronger areas within the supply and demand. So let me break it down. Let's get into NQ real quick, and we will chart that out. Messing around a bit earlier, just preparing for today. And another cool trick with TradingView, guys, is if you do want to clear your chart, you could just hold the shift key, click the top, click the bottom, and then you simply just hit the little trash can. When do you enter a trade after the break of the demand to go long? So real quick, I'll go back to NQ real quick, go back to ES real quick, and we'll take a look at that 8-hour demand that held. That's actually a very good idea. That way we could sort of see exactly what was going on. So this is the 8-hour demand that we were looking at earlier that I showed held twice. And so, yeah, see how this move was sort of happening overnight? It was happening overnight. Our market, we opened right here is when the U.S. markets, the New York Stock Exchange, opened. Now, what you could do with supply and demand too, guys, is because there's liquidity 23 hours a day and the market's always moving, obviously we wouldn't have been able to get in this trade unless you had a market order at demand. But then again, if you have a market order at demand, you got to be ready for this trade to go 23 points against you before being stopped out. So you would really need a good risk or reward. You need to maybe size down on this trade. So what you could do then is you could wait till the market opens, right? Unless you are trading during these times. But you could wait till the market opens, and you could make your trade plan pre-market, and you could say, okay, well, it looks like we rejected this 8-hour demand overnight, and it looks like we're holding. I think we have room to go if we hold and don't come back. Then that could be your entry. And let's see. This is the 15-minute time frame as well. So I'm just gonna put a timestamp where we open. Right, so we opened right here. So what you could do at this point is using the demand zone is you could have waited for some type of pullback, and once we went higher, you could have entered right around here and put your stop at the previous low. So you would go long position. You'd say, let's say, I never like to enter at the bottom because it's unrealistic, but let's say right here, you put your stop at the low, at that previous swing low, because remember, now that we're in an uptrend, now that we're coming off of demand, we're looking for us to create higher lows and higher highs. See how we keep making higher highs, keep coming back lows, the selling's getting bought. So where would our target be? Our target would be a supply zone. I don't have, let's see. Perfect, here we go, guys. Here's your target. Here's a perfect example, supply, demand, having a target, letting things run if you got to. Let's see. Here we go. So we have a 2-hour supply zone right here. Mark that as red. Throw the little 2H. That's a 3. And so that's going to be our target. So now that we end up going back into the 15-minute, and we'll see how this trade worked out. So let's go back into the 15. Take a look. Where are we? We're way over here. Yeah, so check it out. Using higher highs, using lower lows, using that type of market context, you were able to then target supply, get in this long position around here, know where your valid stop would be, so this would be where your exit is if you're wrong on the trade, and this is nearly a 4-to-1 risk-reward trade. That's a fantastic risk-reward. These are the types of risk-rewards and the types of trades you want to be taking, because then you're able to lose more than you win on trades and still be a profitable trader. If you win $100 every trade but lose 25 for all your losers, you're able to lose 2 for every 1 you win. You're able to lose 3 for every 1 you win and still be profitable. That's pretty crazy. And with supply and demand, key levels, knowing how to read the chart, knowing how to look for higher highs, higher lows, market context, these types of things make it so much easier to understand what direction we're going in, how to find a proper trade, how to manage a trade, and how to enter a trade. Would your target be at the open or close of the candle that created the supply? So I always look for the open of the candle that created supply. So the open's always going to be the bottom of it. Wait. Yeah. Wait. Threw me off on that question. Give me 1 sec. Yeah, I'm sorry. So the open, yeah. Oh, that was a 3-hour. Sorry, guys. So yeah, this was a 3-hour, and my target would be where the zone starts. So wherever the zone starts, opens, wherever the candle opens is where your target would be. You could always go a little deeper if market context is suggesting that we might break this zone. Then, I mean, you could move your stop, you could add a trail stop to your position. It all depends on what kind of trader you are, too. If you're more of a set, here's my entry, here's my target, here's my stop, which in my opinion is the way to go, because then once you get comfortable with your zones and your trades, what you're able to do is you're able to enter trades and call them sort of like a set and forget. You enter the trade, you set your stop loss, you set your target, and you could, if you wanted to, you could walk away for the rest of the day and then get an alert on your phone if you either hit take profit or if it hits the stop loss. Which, if it hits your stop loss, it shouldn't be that big a deal unless you're sizing in too heavy. And if you're sizing in too heavy, you gotta take a step back and ask yourself, why? And I'll tell you why. Because you want to make money. But as a new trader, or even as somebody with experience, if you're not seeing the success you want, you can't be so eager to make money. You have to be more eager to learn before you earn. You know, you can't expect to make a lot of money if what you were doing before wasn't working in general. what's great about trading is it's the most expandable business. You could start with one contract and practice hitting 5 points with a 2-point stop, or hitting 10 points with a 5-point stop, 2-to-1 risk reward, 2.25 to 1 risk reward. And you could practice those and get good at those. And as soon as you get that down, you're able to then go to 2 contracts, 3 contracts, and you're able to size up once you find something that works for you. Gotcha. I think I got something about open closed. Open green candle is bottom, red candle it's top. Yeah, exactly. Yep. So right. So that's what makes it red or green. Where the market's open, like this big green candle right here, we opened here and it closed here. That's why it's green, because we had a big move up. So let's take another quick look. So this was a great trade, would have worked out fantastic. And then what happened after? We even had a great example of us breaking the zone, coming down, and then holding it and going higher. So let's delete this zone. That was a good trade. So do you guys want me? I'm going to go into NQ now. I'm going to do some more charting. Because I did sort of break down everything and explain it all, I'm not going to do all of that over again. I'm just going to chart supply and demand on NQ. Then we'll take a step back into ES and we'll find some key levels and see how we trade those with it as well. Which time frame is good generally for day trading and as well as scalping. So scalping, you're definitely going to want a shorter time frame. It's funny, normally if I'm in a scalp, I still only use the 5-minute. I personally have a trading rule that I can't go under the 5-minute time frame too many times, as the 1-minute, 3-minute faked me out. No longer for me. You gotta find something that works. You gotta find a set of rules that keeps you in line and disciplined. I enter trades based off the 5 and 15. If I could, the 15 or 30, because remember guys, if you're looking at a higher time frame, most likely than not, you're gonna get a bigger move. You're not gonna be able to get a 50-point move on a 1-minute time frame, but you might be able to get it if you're trading the 1 hour and you're okay to hold for a few hours. Should be the same. Is there a difference in concept between NQ and ES? So the difference in NQ and ES is actually pretty great. So the great thing about ES and NQ and being able to trade with both of them and using ES and NQ as market context and market sentiment is you're able to spot things like divergence. You're able to see if there's going to be a shift in market structure. You have a higher probability of being a professional trader than being a professional athlete. Is that true? I never heard that one. That's interesting. So what's great with supply and demand on ES and NQ is you're able to use both of them together. And a lot of times, so here's a quick fact on NQ on ES that I love to share with our Discord and our Bullishbrs community. I'm hoping there are some new people out there that are looking forward to joining our community. This is how I trade every day. I go live every day. We do this. You see me in the action. I'll say, hey, might look good to go long here. Might look good to short here. We are not an alert Discord. We are a learning and educational Discord. I want to help you guys learn how to trade and spot these zones and spot these trades by yourself. Trading should be something that you want to learn so you could be not only profitable and just free, but so you could be so you could not have to work under somebody. So you could not have to work a 9 to 5. So you could do what you want to do. Be your own boss. Trade when you want. Take a few days off if you want. It's one of the most scalable businesses that we need to take advantage of. And scalping is a great thing because then you're able to get in and out super quick. Now back to what I was saying on ES and NQ. So ES top 10 stocks, it weighs about 27% of ES. So the top 10 stocks in ES, which is SPY, include things like Amazon, Microsoft, Google, Apple, Tesla, things like this. Once we look at NQ, which also has similar to the top 10 stocks as ES, there's one major difference. ES might be 27% of its top 10, which is, in my opinion, a lot, so it should definitely be leading it. But now NQ is 56 or 58% of those top 10 stocks, which is mind-blowing. So if those stocks, which are all mainly tech, are pushing strong, are doing good, Nvidia's beating earnings, crushing it, gapping up pre-market, I'm not shorting ES. NQ's too strong. I'm using that market context to help guide me, engage me in the right direction, and be in the right trade. Once you are able to get in the right direction in the market, it's a lot easier to be profitable. Do you know if TOS has that risk reward tool? It unfortunately doesn't. I used to use TOS. I switched over to TradingView recently. The reason for that is because I started doing more, like, I don't know if you guys ever heard of Apex funded trader accounts. Those are pretty awesome. I'll get into that another day, or if anybody wants to message, of course, you guys could always find us on Twitter, you find us on Instagram, find us anywhere. So let's get back. Let me go into NQ. I'll talk while I chart NQ for you guys. And the reason I'm going to chart NQ is so that I'm able to throw them up side by side, and you guys can sort of get a feel for what I meant by, like, you could trade demand with demand, supply with supply, and divergence. Divergence is probably like number 1 or number 2 in my playbook for, like, my best high probability trades is when I find divergence with the supply and demand, and I'm going to get into that in just a moment for you guys. What broker do you use to trade? So right now I'm using Tradeovate. Tradeovate is what I'm using at the moment. And and the reason I use Tradeovate is because you're able to link Tradeovate to TradingView. And same with TradeStation. TradeStation's another big one that us at Bullishbrs recently got into. But yeah, TradeStation's another big one. Let's see. So let's mark some supply and demand. Just like ES, we'll start with the weekly. And immediately we see the weekly supply. And why is this a supply zone? Because we have a big sell-off, like a huge sell-off. So this is a strong, strong zone. So we're going to mark this. See if we have that template as a supply weekly. And now we have our weekly zone. Now, here's a thought. Because of how bullish and how strong we've been lately, what would you guys do if we came into the supply zone? Would you short it instantly? Would you wait for a higher low? Would you wait for a higher high? How would you trade that? Got another weekly demand zone over here. And I'll go over how I would trade that in just a moment. Wait for lower high or retest and reject. Perfect. Beautiful. I couldn't have said it better for myself. Wait for confirmation. Yup. Exactly. You guys got it. You guys get it. See that? Look at that. It's only been how long, and you guys are already lower high. Psh, it's only been 45 minutes, and you guys are already up to my speed. You guys got it. I'll see you later. Sell half, right? Yup, you could always wait for touch and break out of the zone and draw it down, sell stop. Yup, perfect. Yeah, nice, guys. Very nice. That's awesome. Very good. I'm glad the teaching's working out so far. I'm glad you guys are picking some things up. That's great. So, let's see. So we have our zones. These VPA analysis. Supply and demand zones. Explicitly price-based and no volume involved. Yeah, so what's really great with the supply and demand zones is we could put a volume profile analysis up, and what that's going to do, let's see, a lot of times we end up, oh, it doesn't want to show? That sucks. That stinks. Alright, not sure why it's not working. But yeah, you could use a volume profile analysis with it, and it will actually, a lot of times, more times than not, print those volume bars wherever the higher time frame zones are. And it's pretty mind-blowing on that too. And the reason for that is because let's look left on this weekly zone real quick, right? We had a consolidation here, consolidation here, rejection here, consolidation here, consolidation here. Your time frame is too high for volume. Oh, well, that'll do it. That's probably exactly why. Thank you very much. I appreciate that. See that? That's teamwork right there. Teamwork makes the dream work. That's what Bullishbrs is all about. I better be seeing all of you in here in our Discord Monday morning, all right? because we got money to make in this market. Alright, so let's go to a daily now that we're done with the weekly. And look at that. As soon as I hit daily, this hit me in the face right here. Like a kiss. It said, mwah, right here. Beautiful demand zone. Nice basing and a rally. Throw that as a daily. Throw the little rectangle tool. And guys, if you're using TradingView, a cool trick with TradingView when you're making supply and demand zones is you're going to want this little magnet on. And you could set it to weak magnet, and the reason for this is it's going to automatically link up to the open, high, low, or close of the candle. That way you don't really have to be eyeballing it. It'll automatically select it for you. And with Thinkorswim, it also has a similar feature. If you go into settings and you go in, I think the first page of settings, you scroll down to like the middle part, and it says it says something about price action or tools, and it'll say tool sticks to, and it's normally set on none. If you click none, you could set it to open, high, low, close, and it'll do the same thing as well. Alright, so let's check this daily real quick. Looking at the daily. See, this zone right here could sort of be a daily zone, and the reason I say sort of is because the following day, the following candle, now what's great with supply and demand too, guys, is you could use this type of chart patterns and chart analysis on smaller time frames and trade it. You could trade 15-minute supply and demand intraday and do well. So this zone right here, the following day wicked above it for just a moment. So normally I wouldn't want to mark it. In this case, I will, just to show you guys sort of an example. And when I mark that, what I'm going to do with the rectangle is a little different. What I'm going to do is, instead of bringing it to the high of this candle, the one we're on, I'm just going to drag it over the next one, because that's sort of where that liquidity stopped, and that's where that last order was filled before we had this sell-off. So we'll mark that like that. Alright, let's take a look. We're looking good. And again, guys, remember, the smaller time frame you go into, the smaller the range gets. And that's actually helpful, because then we're able to play more of the range, and we're able to see when the range breaks. Whereas a lot of traders are sort of just anticipating some type of range break. With supply and demand, we're seeing where those actual orders and liquidity are. So we know once it breaks, that's a legit break. We could wait for a retest and take that trade, or we could wait for a higher low and take that trade, or a lower high, whichever direction we're going. So this daily zone, what I would take note of is we did reject it. We started to sell off, but we failed to sell off. And this is a daily zone, so these should have big rejections. So that tells me this zone, automatically we're weak. We're weak in supply, which means we're strong in the market. This zone right here is an okay zone. Gap zones are alright. I'm not the biggest fan, especially if you're making a gap zone on an equity, because unfortunately gaps aren't truly created by liquidity. They're only created by either earnings or just a market movement or something like that. So there's no real liquidity in after hours for equities. So I'm not going to mark this one, but I will go into a lower time frame. Let's take a look at the 8-hour. Do we have anything here? Let's see. Let's see. We got this zone. Nothing too clean on the 8-hour. Maybe this candle right here, because we had our basic rally, a base and a rally. The only issue with this zone is it's a very small zone, so it's sort of hard to trade a smaller zone, because well, it's a smaller zone. There's not much room to stop the stock, so to speak, you know? Like, if we're falling hard, if we're selling off hard, what are the odds a small zone's going to support it compared to a zone that's of size? Let's see. What we got? 130 points on this zone, and then this zone, just so you guys get an idea. 63, right? And that was 100? What was this? Right, so is nearly double the size. If I create a supply and demand zone, a higher time frame, but has a gap in the lower time frame, will it Negate the higher time frame supply and demand. So you mean like if we gap above the zone or below the zone? So basically with zones and with gaps, as long as we're still within the zone, we're valid. If this is our supply zone, right? And I'm sorry, demand zone. I'm looking at it because it's red. If this is our demand zone, right? And for whatever reason we gap down like a lot. Like hypothetically, let's say we gap down 600 points Monday, and now we gapped below this demand. A lot of times what I'll do if we gap below or above a zone is inverse it. So if this was a demand zone, the demand now becomes supply. The reason for that is the liquidity is still there. We gapped it. We did not go through it with actual orders. We gapped it. So we come into this zone, that liquidity is going to start filling. So supply becomes demand, demand becomes supply. And this also works out well with equities. If you have an equity at supply or demand, a lot of times if it gaps above it, we might use that as supply if it was demand, or demand as supply. Would you say that if a fib level and a supply demand both meet price levels, the stronger? Yes, absolutely. Alex, that's a great question. So Fibonacci is another fantastic way to find key levels. And the reason for that is because, well, obviously there's so many institutional traders using it, and it's been around for so long. But what's great with Fibonacci and support and resistance and supply and demand, but mainly supply and demand, is once you learn supply and demand, your goal is to work off of it. Your goal isn't just to know supply and demand and that's it, you're good to go. The goal is to learn supply and demand so you could contribute that to Fibonacci levels, to VWAP. I know now I say I don't use indicators, I use VWAP, volume weighted profile. Volume weighted. What's the A stand? Anybody know what the A stands for? Volume weighted. I'm drawing a blank right now. Alright, I'm not going to sit on it though, but you guys get what I'm saying. That's the average, duh, oh my god. Anchored, no to anchored, but anchored is actually, there is a anchored VWAP, which is pretty cool, because that brings in the previous day's VWAP, which is nice, because let's say we're stuck, we have a VWAP over here, and we have VWAP up here, but we're below it. You could use previous day's VWAP as an area of interest because there was liquidity there, you know. I've noticed a lot of times with equities, actually, they'll go and respect the previous day's VWAP area. And obviously with it being a new day and a new VWAP, institution, or, us, retail traders, don't see that unless they have an anchored VWAP, or if they're looking at previous day and marked it out. But, so let's see, we got that 8 hour, let me just chart up real quick, that way again, I could sort of get these side by side and show you guys exactly how you could use ES with NQ, and that way you could really get some better high probability trades too. I think what I might end up doing is leaving some old zones that were broken. And the reason for that is so I could go back and show you guys before they were broken, how they were used and how you could use them and trade them. So let's go into the daily real quick. Let's see. So you see how this daily, we rejected it momentarily and again we broke right through it. That's just like how this daily is working. Dailies are not holding up. And if you look at year to date, this is year to date, January 1st, right here, we have been bullish. That has been the trend. It's hard to fight the trend, guys. Trend is our friend. But we're coming into some heavy supply, so we'll see. So let's see. Alright, I won't put old zones on. That'll get too confusing. So let me just break down into the 3 hour, sort of finish off charting supply and demand on NQ for you guys. Because I also, if you guys were interested, I wanted to go over VIX as well. Because VIX is another great instrument if you trade ES or NQ. Because it's supposed to be going inverse, and that could also help you with some type of divergence as well. And confirmation. I like to use VIX as confirmation. If I want to long the market, I want there to be a very weak VIX. I want us to be selling off want some type of weak action in VIX if I want to go long on ES, and vice versa. I want VIX to be shooting up, and I want ES to be dropping off, you know? So let's break it down. Let's go 1 hour. We got a 1 hour that formed on top of this 8 hour. Let's check real quick the 90 minute. 90 minute also formed there. Guys, when you get into an instance like this where there's a 90 minute and a 1 hour, it doesn't really matter. I mean, you could mark, let's see, let's mark there on the 90 minute and see what the 1 hour is. You could always mark like whichever's a little higher, but if it falls on the same exact level, you could just mark whichever. As long as you know that that's just a demand zone. You mark it as a 90 minute, mark it as a 90 minute, mark it as an hour, whatever you want it to be. Alright, so let's break it down. Now that we're sort of done with ES and Q on that, let's go into 2 time frames. ES. Alright, now I could show you guys some cool stuff, some really cool stuff. First, we're going to sync everything up. That way, we see everything on NQ is the same time frame we're seeing on ES. So we could really see if we're going with the trend, if we're creating higher highs, if we're creating lower lows, or if there's some type of divergence. And let's say ES was making lower lows while NQ created a higher low. That's some type of divergence I would look for there to be a market structure shift and a change in price action. And especially with supply and demand. If I get that in a supply or demand zone, it's perfect. Too perfect. Alright, so let's take a look. I just got one more question from Alex. If you can, would you add an indicator real quick to see how well it matches up with your levels? Automatic fib pivot. Yeah, we could take a look real quick for you. Automatic. There we go. I believe this is the one you were talking about. Where? Oh, I see. So let's check the daily real quick. Guys, I'm just going to do this real quick for Alex. They asked if I could do a quick Fibonacci a tool, I guess a trading view tool on this. I'm not really seeing it too well on that, but I also don't know exactly how to use this tool. If I was drawing a Fibonacci, what I would do is I would go to, let's see, here, yeah, let's do it. Let's draw a quick fib on here, and we'll see how it worked. Why is it like this? Can it not be colorful? There we go. Alright, so let's see. Fibs. The fib held up here. I'm gonna get this indicator off. I do apologize about not getting that working for you. If you want, you could always message me. I'm Kevin, Bullishbrs Kevin. If you message our Instagram, I'll probably be the one to answer. You see how it's sort of lining up with these key levels, the 61%, that's a nice one. There we go, that's a good one. Yeah, Fibonacci is a great tool to help find key levels, support and resistance type levels. Over here, very good. Yeah, that's awesome, that's really clean. For sure. Alright, now let's get into, I just want to go over some divergence for you guys, because divergence has been a huge tool that I've been using to place my trades, and it's really been working out nicely for me. Let's see if we can find one. Okay, here's an example of some divergence on the 4-hour chart. So what we're looking for on divergence, now ES and NQ, because they are with each other, they have similar stocks. Like I mentioned earlier, the top 10 on ES and NQ are almost identical, except that NQ is weighted much heavier with the top 10. It's about 58% versus ES, which is 27%. So what we'll see sometimes, we'll see almost like some type of some type of divergence, whether it's NQ makes a lower high over here or something, or let's see. Oh, here we go. So, if you can look at the wicks or you can look at the base on these. I'm not a big fan of the wicks. I'd rather go with the bodies. So, what I'm looking for is right here. We had ES made a lower low inside demand, which can be a fake out because what we're doing is we're trapping sellers inside demand. What else is going on NQ? Well, NQ just created a higher low. This is divergence. This is major divergence. And what happens when we have divergence is we get a market shift. So you see how we were coming down, we were coming lower, but NQ created that lower high, which means we have divergence in the market. What happens next is we get a spike. We get a market shift. We get a shift in structure. We get a change in direction. Get a nice big move off of that. What else? Here we go. Here's another divergence for you guys. Divergence, guys, is amazing. Like, I could have skipped the supply and demand and just taught you guys divergence, and that would have been a great tool. That's how great I like supply and demand. Divergence. Supply, demand, support, resistance, divergence, all of it, guys. This is how I trade daily. This is how I teach every day in the Bullishbrs Discord and the community. This is how I make most of my money, is through supply and demand. It's something that works out really well. So, what do we have here? We have a 4-hour support resistance. Divergence. I'm keep doing that. I do apologize. And what happens? We created a lower low right here, and we created a higher low over here. That's divergence. That signifies, again, a shift in market structure, a shift in direction. So what happened? We were going higher before. Now we have divergence. Now we're going to go lower. We're going to pull back. We got a big move. Do you use volume delta? I do not. So we got a big move. We got the divergence. We started to sell off. That was nice. You could have used as a key level for a target, because I know you guys are interested in where should my target be, where should the key levels be. What you would do is you would sort of just look left on this one and see how we were rejecting, how this is our last area where we were basing, and you could target like right here. So that would be, a very nice trade. Let's see. Short position, say you entered on the key level. You put your stop at this high right here, and you had your target at this key level over here. You're looking at, again, almost now a 5-to-1 risk reward. That's a great trade right there. All because you saw divergence. All because you saw ES made a lower low, while NQ made a lower high, while NQ created a higher high. That's divergence. Market is not moving together. When we don't have divergence, they're hand in hand. They go with each other. VIX is another big thing. I use that for intraday divergence as well. And in that situation, it would be better to long NQ since contracts are a bit cheaper in this scenario than ES. So, yes and no about NQ being cheaper than ES, because NQ also has a higher ATR, average true range, and it's about, ES is $50 a point, NQ is about $20 a point, but, I'm trying to see, let's see if we can get a measure move in here. Let's just see. From there, we'll say to the first pullback, or no, we'll go to the low. That's 104 points on ES, and we're looking at 393 points on NQ. So again, it could be a little cheaper per se because it's $20 a point versus $50 a point, but the moves are a lot more violent and wicked. So if you're getting in, you really can't have that tight of a stop on NQ because of how volatile it is. So let's see. So that was a nice divergence. Came up. Did we have any divergence over here? Right, this trade hit. That was a great trade. 4.9 to 1 risk reward. Pretty much a 5.1. Great trade. Another trade situation where you're able to lose more than you win. So imagine now you have a good risk reward. You're using supply and demand, and you're winning more than you lose with a high risk reward. That's crazy. That's crazy. That's what I'm trying to teach. That's what I'm trying to get to you guys. So when that divergence occurs, which contracts would you pick? So, Alex, me personally, I only trade ES, and that's because of how it moves, and I know how to use it. I chart NQ religiously, though, and I use NQ and always have it up on my charts because I'm always looking for that divergence. I'm always looking for some type of move or some type of suggestion that the market's going to change, or that, let's say, NQ starts rejecting supply before ES does, because remember, the top 10 in NQ are a lot heavier, so if tech starts selling off, we'll be affected on NQ a bit stronger than we were on ES. So if the market follows suit, we're most likely going to get a continuation. So what we're going to look for now, I just wanted to see if there was divergence here. There was sort of divergence here. You're not going to always get some type of divergence on every reversal. I mean, if you wanted to mark right here was right, we created a lower low and then a higher low right here, and NQ was sort of sitting flat, right? So a little bit of divergence, but that's a weak divergence, what we call a weak divergence. A strong divergence is an obvious divergence. A lower high, while this one created a higher high. If NQ made higher high but ES higher low, why would you short ES? I would short ES because that's that NQ making that higher high right here, while ES made a higher low, means ES is not agreeing with NQ. Market structure tells all, and if we're making continuous higher highs, then good, we'll stay golden, we'll keep going long. But because right here, it just created a lower high, but NQ wanted to create a higher high, that's divergence. It means the market is not in agreement, and there's going to be a shift in market structure, most likely to the opposite direction. Gotta make sense, go with that works better for you. Yes, exactly, Alex, you gotta go with what works best for everybody. You know, if you trade, maybe if anything, instead of trading NQ for $20 a point, you do MNQ, which is just $2 a point, and you do, say, like 5 contracts, so it's $10. You know, it's also things you can work with. When we trade things like futures, we're able to really see what size and how much we're risking, how much our reward is, versus options, which has theta, which has decay, which has all those Greeks, which can definitely work in your favor. You could get a high % return on those, but they could also go really, really, really bad against you. So we went over some divergence, we went over some supply and demand. Now we'll go into some key levels and how we find those, and then we'll get into some questions if you guys are curious. I just want to check my notes real quick. Try to create somewhat of an agenda for today's webinar, make sure I cover all the bases for you guys. Trending markets versus balanced markets, that's obviously once NQ and ES don't have theta. Yeah, correct, Alex. So when you're trading futures don't have Greeks. Like options, they're called Greeks. Theta, delta, gamma, vega, these are all the Greeks of options. When you trade futures contracts, there is no theta, no Greeks, no nothing. Can you show some examples with VIX? Absolutely. Let me mark out some key levels real quick, and then we'll do some VIX. So let's get rid of that. And what we'll do, whenever I start, I'm looking for key levels. Again, we look for the higher time frame, and what we want to look for is high areas of rejection. And because we're on the higher time frame, these are strong areas. No one ever mentioned. Oh, yes, the Greek RHO. Oh, what's the rest? It's not like the rest. All of them are gamma, theta. Alright, so look, what I see right here, you guys see where my cursor is? When I mark right here and zoom in, I see we had a really tough time breaking this area. So that tells me that this level is really strong. Did we break through it a few times? Absolutely. Are we going to find a key level that doesn't get ran through every now and then. No, just like supply and demand, it's not going to be perfect each time it comes to it. But you see how we broke it and we failed to hold higher? It's resisting. It resisted. So before it's resisting, then it was supporting, then it was supporting, supported, broke through it, now it's resistance, resistance, broke above it, again, had trouble over here, had trouble over here. So that's a strong key level that I'm going to be looking for in the future once we do break over this supply, when we break over this supply. That sounds like something that have helped me. I oftentimes get the direction right, but and time decay kills my contracts. Yeah, Alex, that happens very often with people, especially new traders too, that options are just really, you could have the direction right, but if the market's chopping on the 5 minute and you're in like a SPY 0 day or you're in an equity, it's going to be hard. It's going to be tough. So let's see. So, anyways, we're on the daily. We're looking for key levels. We found this one at 44.2150. Why? Because looking in the past, we had a very tough time breaking it, and we used it as resistance, 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 resistance. So, we'll see if we come to it again and use it as resistance as well. So again, now let's look even higher. Let's see maybe where this double top was. That's not that bad. That's a pretty decent key level. Why? Because let's look. It rejected here at first. Then once, here we go. This is a good one because we did reject. We didn't have that strong of a rejection. We broke back above it and then we came back and retested it. So once we retested it, we continued. We retested it so we could do a little bit of a liquidity sweep because like I mentioned earlier, the market can't move without grabbing some liquidity first. Alright, so what happened? It's now support, now it's resistance, now it's support, now it's support, resistance, resistance, resistance. And now it's also in a supply zone. So, we'll come up to this at some point, and that's going to be a strong area that I'm going to look to short. And we might be really bullish at this point, so it'll all depend. If we're too bullish, might not look to short it. Maybe I'll look to scalp it short, because, there's a saying, they say, I don't know how to word it exactly, but it's go long when the market looks to go short when the market looks to go long. Just because, again, the market makers and the stock market itself, you gotta really remember that their goal is to take our retail traders' money. That's why we have to spot these supply and demand zones and trade with them rather than against them. Because when we learn where they're filling their orders, we could then fill our orders with them. And we're only taking a tiny little sliver of the billions and trillions of dollars that's pumping into the market every day. If I want a few thousand, I can have a few thousand. They're not going to miss it. The market don't care. If they want to take a few thousand, they'll take a few thousand, but they still won't care. You got to remember, too, when you're trading, you can't think, oh, the stock market, it knows when I enter and it fakes me out every time. The market does that. The market does not do that. You do that. And you got to accept that you're the one doing that so that you could say, okay, I am doing that. I am doing something wrong. What am I doing wrong? What can I learn to help? What am I doing right? And a lot of times these questions could be answered by yourself if you also just take the time to journal some of your trades. And of course take the time to learn new things, supply, demand, support and resistance, market context, market structure. These are great things to learn too. But when you journal your trades, you're able to go back and say, okay, it looks like I used this as confirmation 3 times, and each time it didn't work. Maybe now I'm going to stop using that as confirmation. Or, hey, I used this as confirmation 5 times, and it worked 4 out of the 5 times. I'm keeping this. This stays in. This goes in my A+ setups. So it's always good to make setups and make trade plans and execute accordingly. And it's always good to be ahead of yourself and ahead of the market. Have your zones ready and have a trade plan for when we come into said zones and levels. This webinar has definitely helped me tons today. Try to use that. I learned. Awesome. Yeah, it's awesome, Alex. We'd appreciate it, definitely. I look forward to having you join soon. If you want, and guys, everybody in here too, just so you know, we do go live every morning on YouTube, and that's actually free. And we do that from market open, so around 9:30 to about 11 every day. And it's normally me or it's my coworker Jeremy, and he's also a moderator of Bullishbrs. And he's got a little bit of a different trading style. He's more of a scalper. My specialty is more of supply and demand. But we have a really great community, and we all look out for each other's. Alright. So, what's great about supply and demand too, guys, is it doesn't tell you word for word, but it shows you if the market is moving in a direction or if we're ranging. Yes, got great value. Awesome, Thomas, I'm glad you got some great value. We will see you Monday. I appreciate that. I'm gonna wrap this up shortly. I do want to go over VIX real quick, because I did have some people asking about it. Just an FYI, guys, on VIX, because I trade futures, ES, and NQ. With VIX, I don't actually do supply and demand that much on it. I'm more of just key levels on VIX. And another thing, I don't use VIX futures, I use VIX, the ETF. What do you search on YouTube? There's still time to address. Yeah, Aaron, I'll definitely go over some equities. What do you search on? Yeah, Don, if you want, search up just a regular YouTube page, Bullishbrs, and it's under our live section. We go live every Monday through Friday. And the reason I use VIX, by the way, and not VIX futures, is just because personally I see a lot of cleaner intraday movements on VIX VIX versus VIX VX. The futures sort of could be a little choppy and could be a little more in a range than the VIX ETF. The ETF could be a little bit smoother sometimes, so I guess that's why I've been doing better. But again, that's another part of to each his own. You guys might have more success with VIX futures than I had success with VIX, the ETF. So let's see. I would do just key levels just like I would normally do. I'd look at the daily. I'd come up here. I'd say, where are we? Rejecting the most. Mirror, mirror on the wall. Where's the greatest rejection of them all? And it looks like it wants to be right here. And the reason I tried to get that one is because if you look right over here, I wanted us to get these two wicks in there as well. Even though I do know, obviously, over here we push higher, and I don't think we're going to be seeing up here anytime soon. Maybe if we get some crazy movements, we never know. But we're hitting new lows we haven't seen since 2022, 2021 almost. Yeah, since 2021. That's pretty crazy, guys. We're in quite a strong market right now, as crazy as the news is and as crazy as the world is right now. So what would I do? I'd look for some more key levels, say maybe right here, because again, when I'm doing key levels, I want a zoomed out, clean chart, zoomed out and clean, so I could scan it real quick with my eyes and say, okay, rejection, 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 rejection. That's where it is. Rejection, rejection, support, rejection, rejection, support. That's where it is. So let's go in down here now. That's a solid key level right there. And a lot of times, guys, because I do my key levels on the higher time frames, like the 4 hour and the daily and things like that, what you could do is when you do intraday levels, you can do them as a different color. So like I do my gold levels on the higher time frame, and a lot of times if you tune into one of our lives, you'll see me with like a blue trend line or key level, and those will be from like more previous days or more previous action. So like, let's say like right here let's say that's a very nice level. I'll make this one like a light blue, and I'll look to play this as a retest. So I'll look for us to come back up here and retest this to go short, which means the market is going to go higher. Alright. And that's about it on VIX. If you did have any other questions on VIX, you guys let me know. I'm going to pop into one of the one of the equities now. Did anybody have any equity suggestions? You want me to hit up Tesla, Microsoft? Does VIX that low? Doesn't that signal a pending reversal? I mean, you'd think so, but again, that also makes you think the market knows what we're looking for and the market knows how we trade. So the market's hitting new lows on VIX, right, which makes you think, well, we're low, the market's going to need to breathe, the VIX has to come back up. It doesn't have to do anything. It could just keep dropping if it wanted to. Oh, we got Apple, Nvidia, AI. But like, look how strong this blue key level is. This gold key level is the blue one. Is VIX so low? Do you go low on ES? No. So you have to go inverse. So if VIX is going lower, you want ES to be going higher. And if they're going congruent and they're going together, there's an issue in the market, and you don't want to take any trade. They should always be going opposite direction each other. So I got a few equities requests. I'm going to start with Apple. Oh, yeah, you want to go long on ES if VIX is going lower. Absolutely. I'm going to start with Apple, then we'll hit up Nvidia, we'll then do AI and MRVL. And if you guys do have any other suggestions while I'm typing it in, definitely let me know. But I'm pretty sure that'll probably wrap up our future supply and demand webinar course portion today. I do hope you guys all learned something and got something out of it. It was a very great webinar. And I actually do hope to do more of these more in the future. Most likely Saturdays. We'll try to get like a same time, same day type of thing. I do appreciate all of you for tuning in. If you don't mind leaving a like and hit that subscribe button, that would be great and much appreciated. Would mean I did all this for something. No, of course I did all this for something. I did all this for you guys. I want to spread my knowledge with you guys. I want to make everybody here more competent and a better trader. Absolutely. Absolutely. My pleasure. Alright, so let's see, Apple. Now that's a chart. What is your ideal trading time frame? So I usually look when I'm actually placing trades. I trade on the 5-minute as the lowest time frame I'll look at, in the 15-minute. And I'll use ES, NQ, and VIX, and I'll have those three charts up, all connected to the same time frame, so I could switch between 5 and 15 on each one and get a feel for what's going on in the market. Look for divergence, look for supply and demand, look for any type of key levels or any type of clues of what's going on. Alright, so let's see, Apple. So here's an example real quick of a supply zone on Apple that did work for a moment, but not too strong. Daily? No way. Cool. Right, so this zone right here, you know, we came into it, we had a rejection, about a 4-point move, we kept rejecting it. This would have gave you like a few day trades. Like if we look into the 5-minute real quick on these zones, and I'm going to extended hours, regular trading hours only. Remember guys, when you're just plotting supply and demand on equities, you do not want to be using extended trading hours, because there's no real liquidity, there's no real zones being made. You could end up marking a fake zone, a bad zone. So here what you could do though, is you could mark a key level. You can mark right here, and you could say, this is our range. And look at that, it held that range. And then look, we broke demand, we came back to, we broke supply, we came back to the bottom, and we held it. A lot of times you'll see that we'll break it, we'll come back and we'll use supply as demand, or we'll use this main area. Somebody asked earlier, do I target or use the start or the top or the bottom of supply and demand? And it's always going to be where the candle opens. It's always going to be where the trend line is. So like look at that, we wicked through it for a moment, held it, and we bounced right back up. But back to those short trades, you know, it gave you a few short opportunities. If you wanted to take it short here, you could have took it short there. Let's just see real quick what VWAP looks like on here. Right, so look, you could have shorted it, took it out at VWAP, because obviously if you're shorting over here, it's going to be hard to get to any demand because we had such a big gap. That's what's great about VWAP too, is because it's a volume-weighted average price. It's always going to be strong, it's always going to have some type of volume and volatility attached to it, and we will always normally see some type of reaction to it too. So what happened, we opened, we went flying. Look at that, these two 5-minute candles from open, we went straight up to supply and wicked it. $2.78 move in 10 minutes. That's a pretty wild move on Apple. We wicked it. The high of this candle is 173.75, and this zone starts at 173.75. Guys, it doesn't get any more perfect than that. Like, come on now. You take it short right there, you target VWAP, you got yourself about almost $1 move, comes back in, you short it again. But this is where options and theta and all that decay comes in play, is if you were short here, oh, but you know what, this is Apple, oh, but this is Friday, so if you have a 0 day on this, you have a 0 day, you get in near the top over here. Once it pulls back over here, even though it didn't come back to your entry, if you're in a 0 day, I can guarantee you that theta is going to eat you up, and it's going to be a tough trade. Once it comes back down, though, for sure, it'll be great. But if it doesn't come back down, you really have to take those types of things into consideration. So, gave us a few trades, gave us a few setups. The next day, what happened? It stayed in this tight range. Look at that. It ranged between supply and VWAP all day. All day. Then we finally failed it and we stayed below VWAP. Then we could have used VWAP as an entry to go short. Could have been short here. Could have added on. Added on. Then what happened? Next day we gapped up. We hit supply again. Same thing. Hit it. Sold off. This time again, though, you could have added now a new key level. You could have added a new range because you saw we couldn't make our way back down here. And you could say, okay, well, sort of failing over here. Failed to hold lower over here. So let's add a key level about right here. And see what's up. There we go. Some interesting action going on. It's always good to use key levels, guys. Always good to not be a breakout trader, too. It's always good to wait for some type of retest or some type of extra confirmation that says, hey, it is going to go in your direction. So let's see. That broke. Let me go back into just charting the supply and demand, just so I don't get too off course for you guys, so you guys can stick around and I can get to all of the stocks you guys want me to go through. Daily. Right, let's delete that, delete that, delete that. Very good. Alright, like we never started. I'll tell you what, this daily chart right here, this daily candle, if we get a rally candle on this next daily and another rally, this candle right here could potentially be a daily demand zone. So see, that's what's good with knowing supply and demand too, is you know how market structure works. You could say, okay, I know that if we have some type of basing like this with a rejection on the bottom, I know demand forms like this. I know demand usually will go higher. So you're then able to enter your trade. This would be a trade that you could enter long, but the problem, not much of a problem. You would be able to have your stop, but you wouldn't really have much of a target unless you really zoomed back out. But I don't think so. Apple all-time highs? Apple's at all-time highs. When we're at all-time highs, it's definitely harder to have key levels and targets and stuff. So you would sort of just have a trail stop or sort of know where you would stop out. So like right here, this is a 5-1 at the moment. So let's say if you wanted to do whole numbers, a lot of times their whole numbers are very strong. And the reason for that is they're psychological numbers. So you got to remember that a whole number 190 is going to be a key level, 185, 187 maybe. These are going to be potentially strong levels. Why? Because there's volume there? No, but because they're psychological levels, and now that we're creating all-time highs, we don't have any valid supply to look back on. So let's because we don't have much supply to work with on this one, I'll mark out some demand zones, and then I'm going to get into NVIDIA. Alright, so let's see. Oh, so the 195-minute, guys, this is a really, really great time frame, and the reason for that is when you're using it on equities is it gives you 2 candles a day, because each candle is about 195 is about half a day. So there's 6.5 hours in a trading day. It's going to be 2 of these candles. This right here would not mark it as a zone. This is a gap zone. We gapped. It's a gap and go. We gapped and we went. So we broke this zone right here. We just gap and went. We did end up holding this. So you see how this, if I mark this as a supply zone, right? We ended up gapping it and using it as demand. This is a really, really, really great example of a supply turning into demand, actually. Because the question earlier that somebody asked was, when we gap supply or gap demand, how do we use it? This is exactly it. We had the supply zone. It was at the top of this range too. We were low. We gapped above it. And what happened when we came back in it? The liquidity started to fill. We held above it. What happened again? We held. What happened again? We held. So supply turned into demand. And that you could really do that with equities, and that's great. So let me break into NVIDIA now, because that's also going to be a bit of a tough one just because of the, yeah, just because of, you know, all the gaps and earnings and stuff. Great example. Yes, it absolutely was. I hope you picked up on that, because I know you asked about it earlier. I hope you got it, and if not, you know what, you could always message me, because I know you're part of Bullishbrs. You could always hit me up. That's what's great about the community too, guys. Feel free to just shoot me a DM. Just direct message me. It's fine. Awesome. Awesome, awesome, awesome. So let's go into the daily. What are we looking at? So you gotta ask yourself, would this be a demand zone right here? We had a red basing, a long wick on the bottom, and then a candle with a bit of a rally? No. No, 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 no. No way, Jose. No way, no way, no way. Why? For like 3 great reasons. 1, there was no follow through with this rally. 2, this rally candle didn't even go above the highs of this basing candle, which means this wick wasn't even met on this. I would have wanted this candle to be like up to where this candle opened, up to where this candle closed, really. All right, so there's that. So obviously because of the gaps, you would have to go into a smaller time frame. Let's see. Let's check out the 1 hour on here, right? So maybe we have a 1 hour zone right here. We'll mark this and we'll just wait. We'll see how this works. All right, 1 hour. Let's mark that out. All right. And then nothing really down here, so you'd look for, again, a smaller time frame or a different time frame zone. Nothing yet. 45. Again, nothing yet. I always want there to be a different type of pattern or an opposite candle. So I would want this to be a red candle to hold that. So 45, nothing. 30 minutes, still nothing. Maybe this candle is a red basing candle, right? With the long wick on the bottom, no wick on top. But that body and the follow through, non-existent, not there. Alright, so that's sort of about it on NVIDIA. I do apologize, whoever recommended NVIDIA, Joe, I do apologize because NVIDIA is sort of a tough one to chart because of all the gaps. If we went back over here and stuff, we'd probably be able to find something. But definitely a harder read. So let's get into what else we got. MRVL. And guys, remember also the less volume that the stock has, the harder it is to trade supply and demand on it. That's also the why it works so great on ES and NQ, is because they're so liquid. It will always have liquidity. You will never have a trouble filling on ES or NQ. Okay, so what I would look for on Marvel over here is a key level. I would probably, on a stock like Marvel, I might not do supply and demand. I might do more of key levels. Yeah, you see how I marked that key level from just intraday, and then I looked back, and looking back, it worked a few times. So that's what's great about key levels. Let's see if we mark into the daily. That's quite the stock. Maybe a zone right here. But again, it doesn't, in my opinion, this stock doesn't have enough liquidity for it to be strong enough to have a solid supply and demand. You might get a lot of misfires, misinput zones. So I wouldn't force it. And you never want to force a supply or demand zone because then you'll start seeing a lot of issues. All right. With that being said, guys, I think I'm going to wrap it up here. That was a great webinar. I appreciate you all for joining. Again, I do appreciate if you drop a like before you head out and hit the subscribe button. We do go live every day. We have a free Instagram page, Facebook, Twitter, all of that. Make sure you check us out. And I do post my charts every day on our Twitter, our Instagram, and our Facebook. So make sure you check those out too. Would you say it's a good time to put on a call credit spread on stocks that gapped up so high? Don, that's a bit of a hard question. I don't want to give you a wrong answer because personally I don't do credit spreads or any type of option spreads like that. That would be more of a Jeremy question. But again, we go live every day and Jeremy will probably be in Monday with me, so you could ask then and we'll definitely have an answer for you. Alright, thank you so much everybody, appreciate it. Kevin signing off. Happy trading. Be well. Thank you all again for joining. Take care, hit that like and subscribe, and I'll see you guys, if not Monday, maybe next week I'll host another webinar. Appreciate you all for joining and coming in. Happy trading.